understand the reasons for the day's movers and shakers. And get your portfolio ready for tomorrow. Beaming live from the CNBC TV 18 Motilal Oswal studio.
There has been very heavy firing from the Pakistani side all across the LOC and the international border.
Misinformation warfare is a key way to make things worse.
This policy of 1,000 cuts bleeding is not appropriate.
इंडियन आर्मी की जो एयर डिफेंस सिस्टम है उसकी वजह से तकरीबन 50 ड्रोन जो थे पाकिस्तान से जो आए थे उनको निरस्त कर दिया गया.
But there is a window today, and I think by evening, if it does not escalate, I think both sides can sit down and talk.
Now 23,974 on the Nifty, 53,656 on the Nifty Bank.
Thankfully, due to the vigilance of our armed forces, not a single projectile that was fired from the side of Pakistan was able to land over here.
This once again, it's an across-the-board weakness that we're staring at. The Nifty is now just about at that 24,000 mark.
The telcos have been asked to maintain a list of critical telecom infrastructure, especially the ones along the border.
The ongoing IPL, the Cricket Premier League, has been suspended indefinitely.
The mid-cap index too feeling under a fair bit of pressure, and the advanced decline ratio in favour of the declines.
Well, that was the day so far. Hello and welcome to Closing Bell. We're coming to you live from the CNBC TV 18 Motilal Oswal studio. I'm Nigel, and a short bit from now, Prashant as well as Surbhi will be joining in. The markets, well, the Nifty continues to remain under pressure, and all eyes are on the border. I think we had a flash that was up for you on the screen that around 5:30 p.m. later today, we'll get an update. So hopefully over the weekend we have better news flow, and then the markets can get back to tracking fundamentals from Monday onwards. For the time being though, the Nifty under pressure. The good news though is there's a bit of a recovery from the mid-cap index. From being down big time, I think the mid-cap index was trying to fight back. It's trying to make its way back into the green as we speak. So eye on the border, that's more important. Don't mind the near-term volatility on in the stock markets. Hey Surbhi.
Hi Nigel, and I think it is the fact that we don't know too much at this point in time. And I think the market is also taking that measured view. We're also getting into the weekend, so we don't know what kind of news flow we get over the next two days or so. And therefore, till more clarity emerges, till the market has a fair enough idea of whether this is indeed now finally entering its last stages, whether this is a limited conflict, we cannot say. And let's be clear, there was a lot of talk, unconfirmed reports that were doing the rounds last evening. Of course, the channel you're watching, CNBC TV 18, did not put out anything that was not verified, that was not from, confirmed sort of defense channels. And we're waiting for that. This briefing that you're talking about, that's the most critical one, because we need to see whether India thinks that a response to the aggression last night that we faced, whether there is a need for a response, or whether it's going to be a bit of a pause, a wait and watch. We just need to sort of, I think, wait this one out till we have more clarity.
Well, that's right. Logically, all the experts that we've got, the retired personnel as well, they have said that, logically, there should be a de-escalation from here on. Because, the Pakistanis, from their perspective, they've made some noise about it. They have not hit their targets or anything, but it would be enough to convince their people that they've done something about it. While India, in fact, we had to retaliate to the April 22nd hit. So, it appears everyone's had their say as of now. Logically, we should see some kind of de-escalation from here on, and that is the hope as well. We'll have to keep an eye out. But more than the indices, as I've been mentioning for the last few days, the India VIX is of prime importance, and that one refuses to cool off. So once the VIX starts cooling off, that will be the first indicator that the bulls believe they're back in the game and the markets can progress from here on. For the time being, it's up close to around 4.5% or thereabouts. And in the last 15 trading sessions, the India VIX is up close to around 20%. The good news, though, is even with regard to the money market, the rupee, after slipping big time yesterday, I think the rupee today is more or less stable. And keep in mind, the dollar index actually had strengthened overnight. So the rupee actually is doing a relative outperformance after seeing a big slip in the final hour of trade yesterday.
So just very quickly before we get into our trading strategies, just a brief flavor of the kind of stock trends that we're seeing in terms of stock-specific action. Obviously, it's an all-down day. But you do have some interesting outliers. Some of these stocks could be on the back of earnings that the market is like. For instance, I mean, L&T has been holding up, largely speaking. Titan, and you heard the management as well on the channel earlier, up about 3.5%. So some of this is earnings. The entire defense pack has managed to see green because of obvious reasons in a market like this. Stocks like BEL still up about 2.5%. Idea Forge, Paras Defense, HAL, a lot of these, and even the shipbuilders, many of these stocks have managed to hold on to green for the better part of the day. And interestingly speaking, look at something like a Yes Bank, a Union Bank, Bank of India. So these are some names. Actually, PSUs are not too bad. ONGC, NMDC, SBI, Bank of India. Some of these PSUs are finding a little bit of green with very decent volumes as well. There is some element of buying coming in. But the larger point is that there is weakness. Nifty, Bank Nifty, overall, including big stocks like Reliance, etc. Overall, investors are choosing to stay on the sidelines. Hi, Prashant.
Guys, hi. Afternoon. And, it's about a 1% cut, right? So 23,976 is where we're at. Mitesh Thakkar is with us, so let's just bring him in with what he'd like you to do with trades, etc. Mitesh, good afternoon. Good to have you here. What is your sense on the indices? What's the kind of a sort of a level that you got on your mind? 24,198 was that level which broke yesterday. We closed above it. Of course, now we are well below it. What's that level to you?
So, Prashant, to me, I think, one, we still are showing signals of range-bound activity. The hourly to hourly charts, which kind of turned down yesterday, haven't started to look up. And therefore, an immediate upside looks very tricky to me. The VIX as a supplementary indicator is also not cooling off. So, giving way to this thing that the upsides will, in the short term, at least next couple of days, could be tricky. Though I think weekend can always bring some news flow. But as of now, the picture looks like this range of 23,850, 900 to about 24,500 will hold. And therefore, trading should be stock specific. At the lower end of the range, one can attempt a long, but that is something which, once you see some kind of reversal signal from those levels, can be done.
All right, Mitesh, what about individual stocks? For the time being, we're in a bit of a range, but individual stocks, you'll have a few ideas? Yeah.
Good afternoon, Nigel. So, Container Corporation, I think Concor is on the sell side for me. Sell here with a stop at about 657.5. Look for targets of around 620. And on the buying side, I have Bharat Forge. It's a stock which has given a good breakout. Bharat Forge is a buy with the stop at about 1140 or thereabouts, and look for a target of around 1200.
Okay. All right, Mitesh, got it. Thanks very much. We'll come back to you a little closer to the end of the day's trade for more ideas. Before we get into our fundamental experts, just one more, or rather a set of additional data points from the mutual fund fraternity. Let's just take a look at how the picture is. And the picture is not too bad, actually, you'd have to say. And that's entirely thanks to SIP investors staying steady. Now, these bars will tell you that all is not well also, because flows have been declining. Net equity inflows, this is the fourth straight month of decline that we've seen. And from the peak of, look at the December number, 41,000 crores, now we're down to 24,000 crores. So they've kind of almost halved. So there's no taking away from that truth. But and largely this is happening because the NFO party and that NFO pipeline has completely dried up. This month, in the month of April, there were just 7 new fund offerings and they mopped up a paltry 350 crores. This is the lowest since I've been tracking the data in over sort of 2 years that we've seen. So very, very small inflow number. Mood, the nature of the market, not too many new fund offerings, which is why the equity inflows are dropping. But if you look at flows coming into the big categories, large cap, mid cap, small cap, then it's not bad. The regular flows into regular funds are still coming through. This is the point that I'm making. Look at the April number, for instance, large caps. It's actually inched up a little bit. Mid caps is very, very steady. Small caps also not too bad. Small caps have actually drawn the highest inflow between the 3 market cap categories at almost 4,000 crores. And it's very steady compared to March. So these categories are not really the problem. Hybrid funds, by the way, are seeing some traction. And perhaps that has to do with the fact that the market is very, very volatile. Plus, some of the hybrid categories are very tax efficient as well. So look at that number. That's the longest or the highest that we've seen in the last many, many previous months. 14,257 crores coming in hybrids. And that's largely because of lots of buying in arbitrage funds, SIPs, and that continues to be the silver lining. The numbers keep rising higher and higher. 26,632 crore rupees. That's how much has come in. It is an all-time high. Now, on this issue of SIP stoppage, AMFI clarified, saying that what they're doing is a bit of a cleanup. They are closing down, all the mutual funds are closing down inactive accounts where flows are, patchy or they don't come in. And the cleanup is almost 1 crore accounts over the last several months. And now the active accounts are about 8.38 crores. Finally, the total industry AUM is now inching towards the 70 lakh crore rupee mark, so not bad. Short point, net inflows are coming in, but the NFO party is over, which is why we're nowhere close to the peak of last Diwali or last December. That's the short point, guys.
Okay, all right. Well, let's get in Prakash Diwan then to help us out with some fundamental analysis. Hi, Prakash. It's that sort of a day where the bigger concern is not your portfolio, but in fact, it's the border. That said, the mid-cap index actually has seen a good recovery. So there are various stocks out there which are seeing good amount of buying. Anything has come on your radar?
Good afternoon, Nigel. So I do agree. It's difficult and fairly uncommon to kind of take this very clinically. But I think we should let the armed forces do their bit and we should do our bit as investors, what we can do in the capital markets. And then surprisingly, it's been about 15, 16 straight sessions where foreigners have shown much more confidence in our markets and been buying, and we've seen the net numbers. And we shouldn't get too much worried about how strong our economy is and potentially it can continue growing. So from that perspective, while defense is flavor of the day, and flavor of the season or whatever, you still have opportunities that are emerging. And, had it been any other regular trading session, you would have been talking, or we all would have been talking so much positively about the L&T numbers. Now, it kind of tells you the picture that it gives you is so positive. There's a book which is more from overseas orders that's bigger than the domestic order inflow. You have margins that they're fairly impressive, probably, closer to lifetime highs. You have a build-up in terms of, order execution, which has been rapidly growing consistently with every quarter. So here's a company that's no means small size. It's large enough to kind of, it's difficult to carry forward this kind of growth, and it's demonstrated that. And it's still available at valuations which are probably not at all demanding. So, if you don't lose sight of the opportunities, there are opportunities which are very, very significant and very imminent. And in the same way, you'll probably see some of the financials start looking very positive after some time once things recede. So my personal belief is it's time to buy. You can't be reckless for sure, but you don't also need to be paranoid about things because these things can't last too long. And people keep giving examples of the Ukraine-Russian conflict and say, oh, it lasted so long. But this is of a different nature. The skew is different. The objectives are very different. So my personal view is we should start focusing on fundamentals and on the market positives rather than what's happening. It will continue to happen, and uncertainty will bring things down, and that's the opportunity.
I completely agree, Prakash. Even if this sort of, as you say, simmers down over a period of time, I think what this has done, of course, is shown the spotlight once again on the need for making defense systems, defense products within India. And I think the market is paying attention to it today. Actually, if you just look at what is up in the broader market, it is mostly defense names. Of all, PSU, non-PSU, etc., etc. Nifty Defense Index actually will come up on your screen, and I think that tells the story, 2.5%. Let me bring in Ria. She'll sort of name the names and tell us what's going on. Ria, over to you.
Well, yes, defense and shipbuilding stocks have been trading higher in today's session owing to the significant escalations that we've seen between India and Pakistan since last night. And on the back of this, defense equipment makers are expected to ramp up production in areas like arms and ammunitions, which can include bullets, shells and explosives. Some other areas that can see increased demand are drones and counter-drone systems, missiles and anti-missile systems, and radar tracking systems as well. Another segment that can see increased demand is the repair and overhaul of combat vehicles. Some stocks that are on analysts' radar include Bharat Electronics, which is present in the EWS segment, Bharat Dynamics, which manufactures missiles. BEML can be in focus for the repair and overhaul of combat vehicles, and HAL can see increased demand for operations and maintenance for helicopters and aircrafts. Two stocks are also present in the explosive segment, which includes Solar Industries and Premier Explosives, and Centum Electronics is present in the EWS segment. Now, the entire defense pack has been trading higher today, and the biggest gainers include Idea Forge and Apollo Microsystems. Shipbuilding stocks have also been trading higher. A positive trigger for Garden Reach Shipbuilders was that just yesterday they have delivered the first ASW shallow watercraft to the Indian Navy, so that has been a positive trigger for GRSC. But all of these stocks, even after this rally, are still down anywhere between 7 to 51% from their respective 52-week highs. And stocks that fell the most include Data Patterns, DCX Systems, Midhani, Idea Forge Technologies, and Cochin Shipyard, all down anywhere between 38 to 51%. Taking a look at valuations as well, 8 stocks are trading higher than the 3-year average PE, which include Cochin Shipyard, HAL, Bharat Dynamics, Astra Micro, and BEL as well. 6 stocks of the pack that we've looked at are trading lower than their 3-year average PEs, which include Zen Technologies, Data Patterns, MTAR Technologies, Midhani, and Paris Defense.
Okay, very nice, nicely compiled, Ria. Thank you very much for that. Prakash, what is your pick of the pack?
No, so before I point that out, Rishan, one thing I want to tell you that while defense is definitely flavor of the season, as at morning, I think it was Vineet from DSP who was having a conversation with you, and he pointed out they're still expensive. And that's what Ria's study also reveals, that some of them may be 30-40% off their highs. But the PE multiples can probably be quite challenging. But my pick out of that is a very small company, and we've discussed this probably a few months back, and that is called DCX Systems. Very simple theory out there, or thesis out there. It's a company that is into system integration. Whether you set up a radar surveillance system, or whether you set up a anti-drone system, whether you set up, a line of sight kind of system that need to get implemented, which is actually all about the electronic warfare that is kind of evolving. You will need system integration for anything that you build up, whether it's hardware or software. It needs to finally start talking to each other, making sense. This small company based out of Bangalore does that. There's not too much of news around it because it's just done a few orders from Lockheed Martin in the last few years, a couple of years actually. The earnings are yet to show, but they've been investing a lot into capabilities, and that's exactly one of the manifestation of that is a JV with an Israeli surveillance company, which would not have come very easily. So, these are things which will start taking off once the thing. And the other thing I want to leave you with is this, incident, however bad it is, will actually help a lot of Indian companies, suppliers prove their mettle in terms of efficacy of their products and solutions, which also opens up a very vast market globally for us. So we started with Atmanirbharta, but now you've actually tested things out, and some of them will keep getting tested out and proven, and that's something which will expand and build a conviction. So very, very different sector to look at from a runway perspective as well after this. That's the second order effect that I could think of. But you'll have a lot of vendors getting into the ecosystem and then start doing small bits, if not the entire solution. You can't make a tank, but you could probably supply a lot of things to the tank.
Yeah, no, absolutely take your point. And this is not warmongering. It's just being sensible and smart, right? Deterrence and self-reliance and, in defense is something that India has always been sort of aiming for. Prakash, very quickly, on DCX Systems, I was looking at a longer-term chart. So while the rest of the defense pack shot through the roof, this stock has actually not moved. It's been very range-bound. You're saying some of the contracts and all, so basically the good times are set to roll from the previous contracts. Is that it? Do you have some timelines in mind?
Absolutely. So the testing and trials itself for the kind of work that they do, if you go a bit deeper into that, it's about 3 years plus. So they've been doing this without too much of dilution of capital, not kind of, making too much of a noise about it. And the kind of repeat orders that they've been getting from some of the weaponry manufacturers like Lockheed Martin is case in point. And this JV with Elta, which is the Israeli counterpart. These don't actually happen very easily. It's now that they have establish the capabilities of me, then you'll probably start seeing revenue recognition and, the order book kind of swelling into different markets, different segments. And then you'll have, so if you are patient enough, then things will look very different. So right now it's probably too early because the numbers optically don't give you any indication. But this is for the future and not necessarily for the present.
So some of these equipment, it's showcased that India is battle ready, some of this equipment, which is the positive. And yesterday as well, we had Mr. Rajnath Singh saying that India's defense exports could scale to close to around 50,000 crores by 2030. So that's why, in fact, from being, domestically, we'll be self-sufficient. And we have been able to take on some of the Chinese equipment that's being used by the Pakistanis. And now there'll be an export potential as well. That could be the additional trigger that's coming in. Thanks a lot, Prakash, for joining in. Hope to see you next week, and hopefully things will settle down on the border as well.
Thanks, Nigel.
For the time being, we slip into a short break. On the other side, we have Pankaj Murarka, CEO and CIO of Renaissance Investment Managers, who's waiting for us.
Welcome back. I think we've got the market, which is down 270 points. And of course, the one spot which is looking very, very strong has been the defense space, which we've discussed with Prakash earlier. Ria sort of pointing out what's been happening, valuations, etc. as well. I just want to point out, and I was saying this in the morning as well, market breadth has improved. It was 1:10, 10:1 decline to advance ratio. It is now much better, some 4:1, still in favor of declines, but much better. But even now, like in the morning, there is stuff which is selling off hard, but beyond 8-10 names, volumes not really there at all. Even though numerically there are many more names down as compared to stocks which are higher. Essentially, people being picky, staying away, lack of buying. But there's no determined selling of any sort, I think, which I think is pretty clear if you just look at the broader screen and where volumes are. Pankaj Murarka is with us, CEO and CIO at Renaissance Investment Managers. Pankaj, good to have you with us here. Thank you for your time. Will we, as we come back next week, and will we start to look ahead? Will we start to factor some of this stuff in, which has been going on, which has been top of mind, which of course is the India-Pakistan, the military escalation from Pakistan and the response, etc. What's your sense?
Welcome, Prashant. I think it's very unfortunate, but I clearly think that, Prashant, I would like to think about this more as an escalation than a war. I think it's clear that we've been fighting this proxy war now for almost 4 decades as a country, and India has drawn a new line in terms of its tolerance levels and also in terms of its response to some of these proxy attacks that India has been witnessing. Given the fact that I've said this is one of the biggest risks that India faced, I've always believed this over the last 20 years, is we have the most troubled neighborhood because we are the only country in the world which shares physical borders with two nuclear powers. No other country in the world shares that. So that's our destiny. And 2 nuclear powers, I firmly believe, cannot go to a war. So the ultimate end game of this is probably there's a new defense doctrine that India is now practicing in that sense. Eventually, over a period of time, I don't think so it's happening immediately, but eventually over a period of time, I think we need a new peace doctrine with Pakistan. The Shimla Agreement of 1972 is stale and irrelevant in today's context because proxy war did not exist then. Technology and a lot of other things have changed. Economic power has changed since then. So be that as it may be, I still think this is an escalation, and probably in a few weeks' time, we'll see de-escalation on that. The good thing is India's economy is fairly resilient, and we can deal with this without having any negative rub-off effect on our economy, and that's the real power. As all of us know, as Bill Clinton said in 1990, it's all about the economy, stupid. So it's all about economic power, which translates into all the other things. And the good thing is that we are a pretty resilient economy in that sense. So I still continue to remain, I think, for investors from a medium-term perspective, that whole India story still remains very much in place.
Hi, Pankaj. Indeed, India will come out stronger from this as a nation, and the markets as well will recover in the time to come. Pankaj, but times like these provide opportunities. And in the past, we've spoken about various opportunities. So let's address one such opportunity, the financial and the banking pact. I think a couple of months or so ago, you were talking about the two large private bankers that actually had underperformed in the last few years, but could be looking up from here on. I think HDFC Bank and Kotak Mahindra Bank were the ones that we spoke about. Your view on the banking pact, and would you stick to these two?
Yeah, absolutely, Nigel. So one, we continue to remain positive on financials as a whole. Banking is a dominant part of that, and we continue to remain positive on other parts of the financial segment, including capital markets and fintech. Within banks, yes, we are preferred, holdings are or investments are HDFC Bank and Kotak Bank. Needless to say, we own both of them. We think that both the banks can start delivering industry-leading growth going forward, and clearly, meaning there is a room for valuation uptick as growth catches up in these banks. These banks have underperformed industry growth over the last 2 years, but we think that will change. So yeah, from take a view which is slightly more medium term, we continue to remain positive on both the banks.
Okay, all right, got that. So positive on both these two names. You all have been underweight on consumption, and part of the street that was actually underweight has suddenly started turning a little bit positive. How do you approach this theme? And I think there are select pockets that are still like from the consumption pack, right?
Actually, Nigel, we have actually turned positive on consumption in the last 3 months.
Oh, okay.
A gap of almost 5 years now. As investors, we have actually gone overweight on consumption. Our base hypothesis there is that we're coming out of a pretty sharp slowdown in consumption over the last 8 quarters, and aggregate consumption in the economy is at a pretty low base. So we see, the recovery in consumption will be somewhat gradual, but we see a meaningful recovery in the consumption over the next couple of years, starting from second half of this year onwards. And it seems after a long time, a lot of stars have aligned for consumption recovery in the economy. We've obviously seen moderation in inflation clearly, and that has led to already 2 rate cuts from RBI. We clearly see at least 3 more rate cuts in this financial year going forward. And all of this should provide some impetus to the consumption. More importantly, real wages in rural areas are now growing at a healthy rate. So last 2 years, inflation was much higher and the wage growth was much lower. That's reversed. And probably we're also looking forward to that the tax cut which the government announced in the budget, that should help the pockets of the consumer as that money starts flowing in during the course of this year. And finally, the government has announced the formation of the 8th Pay Commission. So once those recommendations are implemented, that will lead to $50 billion of money in the hands of Indian consumers for the next 3 years. So
Got that, Pankaj. You were underweight, but now as you're telling us, 3 months ago, you have turned overweight, and there are various themes and various reasons that you like this pack. By the way, keep an eye out on the bottom of your screen. Breaking news coming in there. The BCCI Vice President has put it out that for 1 week, you have the IPL that will be suspended. They'll review the situation after a week or so. And, that's the big confirmation that's come in there. 2 stocks normally that have direct exposure to the IPL. One is United Spirits and the other one is Sun TV. Keep in mind, it's very, very small as a contribution to the total SOTP, but those are businesses that have a direct impact. And I think it's a wise decision actually that's coming in there at a time where things are very, very iffy. Calling it off for a week or so and then reviewing the situation is I think,
there was no time earlier.
Yes, and now there's the time.
Looked like it's going to be suspended, and they'll come back and say. But now looks like for a week, and then maybe they will review the situation depending on how things are progressing at that point in time. So that's the news which is coming in. I think we got maybe the BCCI official on camera as well, and we'll try and get you the soundbite. There were some questions about where these matches are going to be played after a week or so. Will it be here? Will it be outside? Etc. Etc. So I think we'll address that as and when we get more information coming through. Pankaj, just a quick word on the earnings season and anything which has stood out to you in terms of a big blowout number, something which has caused you to do something, change of view. Or on the downside. Sorry, actually, I should have started with that because there's more disappointments than beats. Yeah.
Actually, the good thing is, I think in the one key takeaway, Prashant, for us from this earnings season has been that we have incrementally, there have been no incremental downgrades in terms of earnings. The last two quarters, September quarter and December quarter, post the results, we have had meaningful earnings downgrade. This quarter, so it seems the analyst consensus expectations have aligned with where the economy is. And also, the second key takeaway I have from earnings season so far that we've witnessed is we've hit a trough in terms of the earnings deceleration. So probably this year, the year gone by, last year has been one of the slowest earnings growth in the last 5 years post-COVID, where Nifty earnings growth is just about 5%. But I think we should get back to low double-digit earnings growth or low teens kind of earnings growth going forward in this financial year. So I think the key takeaway is that, and clearly I still think that the private banks have stood out in terms of earnings because asset quality has been pretty resilient despite some asset quality issues or some spillovers in terms of bad loans from microfinance sector. And the peak of their NIM pressures, I think, has played out by and large in that sense. So we see earnings improving for private sector financials meaningfully going into the next year.
Yeah. Pankaj, hi, good afternoon. And Nigel, interesting to hear you say that. I know you're a big IPL fan, but I guess at times like these, it is nation first. It's not, I mean, there's a logistics of it of moving teams around, teams like Punjab, Delhi, a lot of the northern teams as well, and with many of the airports either shut or uncertainty. That's the logistical part of it. But even otherwise, in terms of sentiment, perhaps the play can wait.
Yeah, personally, I didn't go to watch the IPL till now, but I'd had something lined up next week. But I think this is a very, very logical move at this stage of time.
Yeah, absolutely. Can be reviewed. I mean, hopefully things get better and then we can all get back to...
Everything else is secondary. The nation first, the border first, then markets, then IPL, then everything.
Absolutely. Couldn't agree more. 100% with you on that. On consumption, Pankaj, I was hearing you say that, you're changing your stance and you're now looking at it a little more favorably. Can you give us a little more color into what side of it? Because staples have been absolutely out, downbeat for I don't know how many quarters now. There are jewelry companies which have had a good cycle, but even their gold prices could be weighing. There could be durable players. So when you say that you're turning positive on consumption, is it actual staples or are you playing it differently? There are QSRs as well. I mean, we could talk about many wheels.
Sure, Surbi. Actually, we are playing, as I said, after a long time. After a gap of almost 6 years, we have bought staples. So after a long time, I'm finding staples exciting because we're already seeing early signs of recovery in volume growth in staples in rural India. In the month of December, we've seen double-digit volume growth in staples in rural India. This is something which I'm seeing after a long time. And we're coming out of a cycle where aggregate consumption has grown at about half the rate of nominal GDP growth. Generally, staples growth is pretty much in line with nominal GDP growth on a long-term average basis, which effectively means that what I'm clearly looking forward to is over the next 2 years, we're going to have a significant rebound in staples consumption from a low base. And valuations in staples companies across large cap and mid caps are pretty much in line with long-term averages. So a combination of being at a growth inflection point and reasonable valuations is something which I'm seeing in staples after a gap of almost 7 years. So which is where we've actually got into staples. Some of the companies that we own in staples includes, names like Godrej Consumer, and some of the other mid-cap companies or small-cap companies like Emami and Jyoti Labs. And at the same time, given the growth bias for our portfolios, we certainly own discretionary consumption across, names like Jubilant Foods and United Spirits, which is more a play on increase in discretionary consumption. So yeah, we're trying to play staples through both a combination of trying to play consumer through a combination of both, which is staples plus discretionary.
Got that. All right, Pankaj, we'll leave it on that note for this afternoon. Thank you very much for being with us. I wish you a good weekend and we look forward to the next conversation. I have to take a quick break right now. We'll come back with some final trades and also we'll get you an update with Parikshit shortly. Plus, there's a mutual fund data that we discussed. We'll have some guests joining in to talk about how the retail investor is dealing with this market volatility. All right, market still nursing a cut of about 270 points as retail investors look at all of this uncertainty. And now, of course, we have a very, very real one here at home. How should they, continue to remain sort of unfazed when it comes to their investments? Let's ask Mr. A. Balasubramaniam, Managing Director and CEO of Aditya Birla Sun Life AMC. Thank you very much for joining in, sir. Always a pleasure to have you on. And we also have you on a day when we've got the AMFI numbers, the monthly numbers. So let's start right there. SIPs are steady, but clearly the good times that the industry was having, all those NFOs mopping up 20,000, 25,000 crores in a month, that money is out of the system, which is why the peak flows have come down, by almost 80-85%. How would you describe the mood and the environment? And, what do you expect from the business if this uncertainty continues?
Yeah, thanks, Surabhi. As rightly pointed out, clearly the flows are divided into two parts. The existing schemes getting the flows, which has been the trend that we are seeing for the last almost 3-4 quarters. The existing funds like Flexi Cap Fund, Balance Automotive Fund, Smaller Mid Cap Fund, they continue to see flows in the form of SIP. NFO is actually the period where, depending upon the gap, the NFO comes, and in fact, last year we saw a lot of thematic fund launches that we got significant flows coming in. And the NFOs will continue to be launched by people, either new players or existing players, depending upon where the gap exists. I think one of the fundamental shifts that we are always quite happy to see is actually the existing flows. The flows should come in the existing funds, and that continues. I think SIP has now become more or less a permanent flows. I think I would have seen the number somewhere about 20% crores, the top line number. That again continues to remain a strong force of flows for the mutual fund industry, as a result of which the DII investment in the equity market continues to remain positive.
Yeah.
From a maturity point of view, I always believe that the last 2-3 years, maturity of investors have been going up on each passing day as they start experiencing more and more better experience on investing in mutual funds. And the flows, the maturity also has been rising, I would say.
Sure, got that point. So just a moment, we're also looking at some very important flashes coming in from Mr. Prahlad Joshi, Consumer Affairs Minister, and he's pointing out that there is a lot of rumor mongering, fear mongering, right now on availability of essentials, and he's saying that he would like to categorically state that we have more than enough stock of everything required across the country. Our stock is in fact many times larger than what is needed, and there's no reason absolutely for anyone to rush to markets to stock up. So yes, that's the least we can do as citizens, not spread panic, not spread rumors, and not create a situation when there isn't one when it comes to, of course, supply of essential commodities. So that's an appeal going out to all the viewers out there. Bala sir, just to get back, so we were discussing, general liquidity levels within funds, and we were discussing this with Nilesh of Kotak as well in the morning. At Aditya Birla Sun Life, across all your schemes, I mean, what are the cash levels and what is the approach? I mean, would you be using any kind of dips, including maybe the one like today, to buy? Or as a fund house, are you taking a more measured wait and watch approach?
I think in general, equity managers, even as a fund house, don't give too much of cash because the money is given to us for investing in various sectors, stocks, depending upon where the comfort lies. Therefore, portfolio constructions remains fully invested all the point of time. But having said that, the cash level generally is about 3 to 5% kind of cash level. It varies from scheme to scheme. That is mostly to meet any kind of the position that one has to build from the margin point of view and any other point of view. So that's something has been the case. If that's the case, actually, most of the managers in the industry, I would say. At the same time, whatever the inflows that are coming in, temporarily it may lie in the cash component, but ultimately get deployed using the current market volatility as an opportunity. Look at where the comfort is there. Therefore, the sizing is one of the area of focus we always have. And wherever you need to increase the size on base of your high conviction that we have, and keep looking at those opportunities and build it as part of the portfolio. Therefore, the cash component is, even if it is there, is more temporary. And generally, we don't take call. But at the same time, there has also been opinion that we have been having as a fund house the last almost 1 year correction that we have witnessed in the equity market have brought the Indian market equity valuations at a reasonably good level, coming close to the long-term average. At the same time, the push that has been coming from both the government and RBI monetary policy by way of cutting interest rates now reviving the growth momentum in the economy, which is what we are witnessing and some of the sectors that we are tracking. Therefore, the valuation discomfort otherwise used to exist for one to stay in cash, that doesn't arise. But on this basis of the current market conditions, we don't generally take a cash call. At the end of the day, it all depends upon how long the current uncertainty continues. One doesn't know. At the same time, the recent past that we have witnessed, that we have seen in the last 2 years,
right,
and a similar uncertainty that have come and hit, but markets have remained somewhat resilient. Our belief is our market will come out somewhat resilient despite current the pressure that we are seeing and the broader the outlook perspective.
Bala, it's great to see you. Good afternoon, Prashant here. It's been a while. Could you, Bala, give a sense of what is the total cash that mutual funds are sitting on? I remember reading about a month, 2 months back, I think it was, that it was the highest ever cash level that mutual funds had. Is that, I mean, that's a lot of firepower that MFs are holding on to. Do you have that number at the end of the month?
I think the number generally ranges, Prashant, between 3 to 5% on an average. The least that people who own about 3% cash. It's not something they take cash call. It is the inflow that keeps coming in. They take time actually deploy it. That's one. Second is, as I mentioned earlier, for any other purpose that deal may come, therefore you must keep some amount of cash. But otherwise, cash call generally people don't take. But having said that, the outer limit could be about, say, 5%. On an average, we should not count more than about 3 to 5% number. If you take that number on a size of roughly about 40 lakh crore size, the cash component could be somewhere around of that amount. If you take roughly about 1 lakh to 1 lakh 60 crores, as industry aggregate number will come. Which in my own belief is it's something is good. At every fall, that money could find its way to the market. Yeah. That's why we see the number. Whenever the market falls, domestic mutual fund investors have been the largest buyer in the market. I think it will remain. As I mentioned earlier, unlike the past, this time around, there has not been a significant concern on both the valuations as well as the economic momentum that could come back in the year 25-26, which also is somewhat is being counted upon for the market to actually see some of bottom. So that's where I think the mutual fund money will come in handy.
All right, okay. Absolutely. Bala, thank you very much for joining us. Good speaking with you. It's a pleasure having you here on CNBC TV 18. And come back again, a lot more to discuss in terms of the MF space, but a lot of money sitting on the sidelines. We're at 24,000.
Actually, Nilesh Shah of Kotak as well had given us a number in the morning. He said that 5% of approximately 40 lakh crore will be around 2 lakh crore. And then you have around 70,000 crores of, balance funds. So that as well could find its way in. And add to that, you have the SIP number as well. So liquidity in the system is ample.
Yes, ample.
And, that's what will cushion as well. Though he also made that point that they will not be trying to give anyone an easy exit. So you need to keep that in mind as well. But good amount of liquidity in the system is always a good thought and gives a comfort, to a lot of investors.
Absolutely. And, that's why downsides, I mean, whenever there are sell-offs, they're brief, they're shallow, and the market finds its footing. Mitesh is with us with what you should buy or sell today for a reverse trade on Monday. Mitesh, what do you have?
BTST and Hero Motors with a stop at about 35 or 34 and target of around 38.85. And DLF is on the negative side. Take a STVT over there. Keep a stop just above the levels of 635 for a 616 kind of target.
Mitesh, sorry, if you can hear me, I think we lost you there. The line's a bit patchy. For Hero, you said stop at 3,500. Or did I hear that wrong?
No, 38.35.
38.35. That's why. 38.35 and that 38.80 or so was the target basically. So get that. So that is the trade. Those are trades coming in from Mitesh at this point in time. We're down 273 odd points at this stage, 15 minutes to go as far as market close. Nigel?
Well, that's right. Just to pull up a few stocks in the broader markets, actually, that have seen a big spike up in the last few minutes. Yes Bank is one stock that's moved higher. And the other one I'm looking at is VIP, one of the big underperformers. But that stock in an otherwise wobbly market is gradually making its way to the top volume movers in today's trading session as well, up close to around 5% or thereabouts. Well, let's welcome our market guest. We have Hemang Jani, who joins us, as well as Richard Harris, Executive Director of Port Shelter, who joins in on the show. Hi, gentlemen. Thanks a lot for joining in. Well, Richard, I'm coming across to you first. The FIs have gradually returned to the Indian markets in the last month or so. Because of the ongoing geopolitical situation here in India on the borders, do you think that will deter FIs? I was looking at past instances where we have seen some of these skirmishes on the border, and it didn't really deter foreign investors at that point of time. But your take?
I think we have to separate politics from economics. And, we all know the phrase, it's the economy stupid. And now I'm not talking to you, of course. But it's really the economy drives these things. So if a skirmish is unlikely to affect markets in general, then markets will largely ride through it. I mean, you can see what's happened basically with a major war in Ukraine, major wars in the Middle East, and the markets have generally not really moved. And indeed, even with threats we're seeing to Europe, we're actually seeing the markets move because Europe clearly has to spend more on defense. So I think that as things stand at the moment, these are skirmishes. They are unlikely to affect economies in general, and that's really what investors focus on.
Okay, all right. So unlikely. Economics more important than these, occasional political issues that do take place, geopolitical issues. But Richard, India trades at a big premium in comparison to most global markets, particularly the emerging market basket. Do you think, there's a reason that we could see some kind of trimming off from that because of this?
Well, we have seen the market perform less well than it has in the past, but you have to be careful about comparing it to, say, an EM basket, because most EM countries are so different. And, of course, China is a very large component of that, and China's gone through, 5-6 years of underperformance. So, yes, technically it looks very cheap on that basis. I think that people will look at valuations as they are now and mark them as they are now. It seems to me to be clear that the Chinese market, even though it's under threat from tariffs, is likely to remain the one to watch, partly because it's done so badly and partly because the authorities are putting a lot of stimulus into that market.
Right, got that, Richard. So, what's the sense on India? Like you said, it's all about the economy is stupid, but for the timing, there's a lot of uncertainty. And there was global uncertainty just as that was settling, which, by the way, still hasn't. We don't know the eventual contours of the deals that China will strike, or we will strike, for that matter, with the US. Amidst all of this, next 6 months, what would you be doing with the India market?
Well, I think, obviously, India is going to be quite sensitive to what happens in the rest of the world. My analysis at the moment is that markets in the short term will probably do quite well. And you may say, why is that? And that's because Trump, of course, came up with some really big threats to trade globally. And the markets priced themselves downwards quite substantially. Now what we're seeing is little pieces of good news. I don't think this is a strategy, by the way. I think it's just how it's worked out. We're seeing little pieces of good news. UK trade deal with India, UK trade deal with America. Then we'll see trade deals with Europe and the US, and trade deal maybe with China and the US. So we'll have all these little pieces of good news. But we're still in a position that the supply chains have been seriously damaged, that we won't see tariffs go down to what we had before. So I think in the shorter term, markets will take some encouragement from little pieces of good news. In the long term, there's an obsession with recession. We have to be very concerned that supply chains have been very seriously damaged, that inflation will go up sharply in the States, that these tariffs will have an impact. They already have had an impact. So the tariff story at the moment might be actually quite a good one, but the really big story looking further out is the possibility of recession.
Okay, absolutely. I think lots of different brokers, banks are still calling that out. That's what Jahangir Aziz of JP Morgan told us, that they are expecting recession in the second half. By the way, for us here, the mid-cap index has turned into the green for what it's worth. There's a little bit of buying. A lot of individual names, and particularly any of the companies that are linked with defense, they are doing very well this afternoon. Richard, thank you very much for joining in and giving us that perspective. Really appreciated this afternoon. Thank you. All right. Well, with that, let's move on to Hemang Jani, who's been waiting by patiently. Hemang, thank you for being with us. It's been a tough last many hours, but I mean, less tough for us, far tougher for those who are actually at the borders. What would you, let's start with basic advice. Till this settles, we have full clarity, hopefully by next week. What would your suggestion or advice be for investors?
Surabhi, in fact, 2025 has begun with a lot of turbulence, and it seems, that it's been a never-ending kind of a ride or a grind that we are seeing. But the good part about this whole saga is that despite the volatility, whether it's the current situation that we are going through at the border, war with Pakistan. We had this Trump tariff-related things, but the market, by and large, remained quite okay. We had a very smart bounce back. So I do think that, when the mid-caps and the small-cap stocks, which have underperformed in the last, let's say, about, 1 month in the last leg of rally, I think, this weakness would provide a good entry point. And definitely, we would be more positive and inclined towards, those smaller and mid-cap themes versus the large cap ones.
All right. Hi, Hemang. Good afternoon and good to see you, Ben. Hemang, let's talk stock specific. I recall one of those auto hangs that you liked in the past was SGS, if I'm not mistaken. The stock is up close to around 10% today. The con call, I believe, was fairly good. They've penetrated into a couple of new clients. If you want to talk about that or any other auto ancillary stock.
So yes, SGS Enterprise is something that we are covering. We have been liking that stock. And while the company announced the numbers were reasonably okay. But I think what stood out was that they penetrated into Hero Motors and they have managed to get order of almost about 80 crore. Now this company has a total turnover of about 750-80 crore. So almost 12% of the business would come from Hero, and it's a marquee account which they were trying to get for a long time. So I do think that this could be a big, re-rating trigger for the stock. Anyway, it's not a very expensive stock, about 12 or 13 times the next year. Means a company growing at about 22-23%. So definitely a positive view out there.
All right. Thanks a lot, Hemang, for joining in and talking about a couple of stocks. A short but effective chat. We look forward to seeing you next week. For the time being, we slip into a short break. You come back, we'll continue our focus on markets as well as on stocks.
Our focus on India-Pakistan tensions, and India has been retaliating and responding to Pakistan's offensive all along the LOC and the international border. We've used our best weapons and best defense systems in our arsenal. India is not just capable of defending its skies, it is now practically controlling them. Operation Sindoor has shown the strength of India's air defense ecosystem. A highly sophisticated, integrated counter-UAV grid was used to detect and disrupt drones, We had S-400 missiles, Barak 8 Akash surface-to-air missiles, DRDO anti-drone technology was used to create India's air defense shield. Indian forces destroyed targets deep inside Pakistani territory. Air Force and Army destroyed Chinese-supplied HQ-9 air defense units in Lahore, and critical radars were damaged as well. Air defense architecture has been ramped up significantly since 2014. India today has 3 S-400 squadrons along the borders with China and Pakistan. We also have Barak 8 medium-range surface-to-air missiles acquired from Israel, which are now deployed in frontline bases like Bathinda. We have man-portable counter-drone systems to jam and disable hostile UAVs, and this was installed in the year 2024. India, for the first time, used loitering munitions made in India. Loitering munitions carried out simultaneous precision strikes across Pakistan sectors, taking them by surprise. We had Israeli-origin Harab drones deployed to target and destroy air defense assets in Karachi and Lahore. We had Rafale fighter jets equipped with Scalp and Hammer missiles to destroy terror camps during Operation Sindoor. So let's now look at the missile systems, the weapon systems, the air defense systems used by India in the last 24 hours. First, the Barak system. This is a surface-to-air missile system developed jointly by Israel and India. It has a range of 150 kilometers. The Barak 8 can engage multiple targets simultaneously. The speed is Mach 2 or 600 meters per second. The Akash is an India-made medium-range movable surface-to-air missile. It has a range of 25 kilometers and can simultaneously engage multiple targets in group mode or autonomous mode. The speed is Mach 2.5 or more than 850 meters per second. Then you have the Russian-origin S-125 Pechora surface-to-air missile system that can engage drones, fighters and helicopters. The range is 30 kilometers. It has a speed of Mach 3.5 or 1.2 kilometers per second. Then you have the indigenously built Samar platforms or surface-to-air missile for assured retaliation against low-flying targets. This has a range of 30 kilometers and the speed is 2.5 Mach or over 850 meters per second. You've got the L-70 40mm anti-aircraft guns, originally made by Sweden's Bofors, and this is used against radar-dodging drones. It has a range of up to 4 kilometers and can fire 240 or 330 rounds per minute. You also have the Shilka system, which is of Russian origin. It has a range of over 20 kilometers and can fire 4,000 rounds per minute. Now, this system is lethal against small drones and helicopters. And then you have the formidable S-400 air defense system that we acquired from Russia. Now, this is one of the best air defense systems in the world, and this really gives India an edge. It has a range of 400 kilometers to 600 kilometers, a speed of 4.8 kilometers per second, and can engage multiple targets simultaneously. Lastly, you have counter UAV systems. These are DRDO-developed counter drone systems with hard kill capabilities and can jam, disrupt, and disable drones' communications as well.
All right, Parikshit, thank you very much for that. So that is a sort of a very comprehensive look at, the kind of air defense system, a grid, a layered defense grid, which we've used to thwart and we will continue to use to thwart any attacks by the Pakistani side in the coming days and, of course, in the future as well. The defense index itself, I think the really shining spot, 3% higher on the Nifty Defense Index today. The bank index was down about 1%. The Nifty ends down about 1%. Mid-cap index crept back into the green by close, I think 0.14 higher, 53,306. And I think the small cap index will come up on the screen as well, about 1/3% lower, 0.6 odd % down on the small cap index. So that's the overall sort of read through as far as markets are concerned. Just looking at for the week, what really happened. Nifty was down 1.4, by the way, 1.4% for the week. The Nifty Bank ends about 2.7 lower for the week. The mid-cap index is down 0.9, while the small-cap index, actually, the loss was a little more pronounced as compared to the mid-cap index. There was a 2% cut that we had coming through. Lots of big movers, and maybe if you can put some of these stocks up. But I'm mentioning the weekly changes here. KPR Mills was up 29% for the week. Welspun Living was up 19%. These are the top gainers on out of a basket of NSE 500. CCL Products 21%. RR Kabel was up 21, Yes Bank 15, CET was up 12, Endurance was up 10, NetWeb was up 10. So, you know, that's the winners list for the week, Friday to Friday, that we really had going. Well, it's a wrap on this edition of Closing Bell. From all of us here, goodbye. Thank you very much. But do join us as we take you through Editors Roundtable on the other side.